Amazon stock reports earnings in a few days on April 30th. And so in this video, we will analyze 3 unusual trades by wealthy investors that we detected on the last trading day, so that we can trade in the same direction as the rich, bullish or bearish, and share how we set up our earnings trade strategy, which happens to be risk-free. No loss even if we're wrong, and it can profit a lot if we're right. Sounds unfair, right? But it's possible because we just did this trade strategy for Google earnings, which went up as we predicted. If you missed it, we'll put a link to our Google video up here. Now, if you've been following our channel, the last time we analyzed Amazon stock was on February 28 on this day, when Amazon was trading at $172 per share. We published this video on February 28, sharing our trade strategy. So if you missed this video, we'll put a link at the top here. Make sure to subscribe and hit the bell icon so you don't miss out on these profitable opportunities in our videos. So how much profit did our trade make? Well, let's take a look at the strategy in more detail on the profit loss diagram. You can see that this was our strategy that we discussed on February 28, a vertical call spread at the 180 strike calls and the 190s. And since Amazon is trading at about 180 now, these call options at the 180 are in the money. So they are profitable now. And we can see the profit of about $83 per trade. Now we spent $370 for each of these trades. So $83 of profit divided by the cost of the trade, $370, times 100 for a percentage is 22% profit so far, which is actually a lot better than if we had just bought the stock, because you can see over here, February 28, when it was trading at 172, last trading day, only a 3.9% gain on the stock. So that's in comparison to the 22% gain that we got from options strategies. So that is a major difference here. So if you're not beating the stock market, either your trading strategy is not good enough, or the stocks you pick are not performing good enough. And if that's the case, go to our website to learn more about how we pick the stocks wealthy investors are trading to beat the stock market, and learn more about our trading strategy to reduce risk and increase profits. For example, we readjusted this Amazon trade by setting up a risk-free earnings trading strategy with no loss, which we will show at the end of this video, after we analyze the 3 unusual trades to help us pick a direction for Amazon earnings, bullish or bearish. So without further ado, let's dive into the unusual option activity as usual. As we can see here on the options time and sales tape, the first unusual options happening at the last hour. In fact, all 3 of them were happening at the last hour. You can see here, June 21st options being traded at 3:40 p.m. 185 strike calls, 185 strike puts. We also see another 4,000 of these being traded at 3 p.m. Okay, so a total of 10,000 contracts here. What does this mean? Let's take a look at the June 21st option chain at the 185 strike calls and puts. You can see them right over here. The volume 14,000, 20,000 open interest. So these 20,000 is greater than the 10,000 unusual options, so these could potentially be closing trades. However, on the put side, notice here, open interest is 8,200. That's less than 10,000. So now we know these are opening trades. Okay. So what are they doing here? They are selling the 185 strike calls, collecting premium, and buying the 185 strike puts. So when we analyze this trade, you can see that this is a bearish short position. Okay. You can also see that this has a negative delta, so this is bearish. If it was bullish, it would have been a positive delta. Now, just because it's bearish, this does not mean that we will immediately also go bearish as well, because we also analyze other variables related to this trade to find out more as to what this investor is doing. And based on our analysis, we actually think that this is a hedging trade. This is not a very bearish trade. What we mean by that is that this investor has shares of Amazon stock, okay? And we can add these shares in. So one option contract controls 100 shares of stock. And so you can see that once we add these shares in, this is what the trade now looks like. The profit loss is on the y-axis here, and the share price is on the x-axis. So notice that this blue line is flat, meaning at expiration, the profit is going to be positive since it is above 0. Okay, you can see wherever Amazon trades, down or up, it is a profit of 73, shown right here on this box here at expiration. So this is how hedge funds make money consistently. No matter if the stock crashes, they will still be profitable. Okay, and because this is a hedging trade, we will not necessarily follow this direction of it being a short bearish position. We have to look at another unusual option trade to see if we get better, more clear data signals. Okay, so let's move on to the second trade here, because this is considered a trade that is not very, very helpful in our selection for an earnings trade. So the second trade we'd like to go over here, it happened at 3:30 p.m. These 3,500 contracts expiring January 2025. Now, just because they expire a year later does not necessarily mean we have to wait that long. The fact that they put on these positions right now still is significant, because you can see that once this position is placed on, they can be profitable immediately. They do not have to wait. Okay, same strike prices actually, 185s. So when we take a look at the chain for the January 2025s at the 185 strikes, we can see here there's an open interest of 8,600, and this is clearly greater than the 3,500, so these could be closing trades. Same on the put side. 7,000, that's greater than 3,500 unusual options, so these could also be closing trades. But based on our analysis of other variables, there's a higher chance that these are opening trades where they were selling the 185 strike puts and buying the 185 strike calls. And so when you analyze this trade, you can see that this is a long bullish synthetic trade with a positive delta. Okay, so the opposite of the previous trade we had just analyzed. Okay, and this trade actually cost quite a lot of buying power to put on because they sold the 185 strike puts. You can see that it is naked. This is essentially like a cash secured put where they are saying they're willing to own 100 shares at the strike price, which would require $18,500 of buying power. And since they did 3,500 contracts, this trade required $64.7 million. Okay, quite a large trade going long bullish on Amazon. Now, because the data for this trade was not so clear as to whether it was opening or closing, we have to analyze a third set of data, which is actually shorter term, so it is more interesting, and also the strike prices that they selected was also very unusual. Okay, so you can see here at 3 p.m. these 4,000 contracts here being traded for the May 3rd options was actually also being traded in conjunction with this trade as well. Okay, so this is the same trader here being done at the 21-second mark. So you can see that this is the 190 strike calls, 2,000 of them, and the 197.5 strike call, 4,000 of them. So there's a ratio of 2 to 4 here. Okay, this is a spread. You can see it right here. It says a spread. All right, what kind of spread? It's a back ratio spread. All right, and so we'll analyze this, and you can see what this actually means for the May 3rd options. So right here at the 190 strike calls, we can see there's 14,000 open interest, but notice how the volume is quite a lot at 24,000. At the 197.5 strike calls, notice 1,600 open interest. That's less than the 4,000. So we know these are opening trades. Okay, so we believe they are buying the 190 strike calls. For each of their trades, they're buying one, and then they're selling two of the 197.5 strike calls. So this is a back ratio strategy. Okay, right over here, as you can see. And what you notice here is that this strategy is targeting a specific strike price or price level right here, peak profit. You can see the blue line here. The highest peak for profit is right here. And so where is this peak? This is about at $198 share price of Amazon. So you can see that this strategy is actually hedged to the downside. If it goes down, it's a very minor loss here, very flat. Right? So by targeting this price here, it helps us set up our options trading strategy for earnings. Okay, so based on this data, as well as the previous one, we want to go bullish long on Amazon. And so this is our earnings strategy here. The same May 3rd options that expire the closest to expiration. You can see here our position is right here, 3 different options, but there's a ratio to it. So for the 197.5 strike calls, which is where that back ratio was selling options, we are also selling options as well. We are selling 2 options for each of our trades and buying one of the 192.5 strike options and the 200 strike call options. And so when we analyze this trade, you can see that our strategy is a butterfly strategy. It costs $62 per trade, but we took profits on the $83 from our previous trade that we discussed over here, right? We readjusted this trade, okay, to essentially roll it into this trade now. And we took that profit of $83. And so subtract the debit of 62 on this trade. So we're left with actually a credit of $21. So this trade to us is a credit. It's not a debit trade to us. Meaning if Amazon crashes, we will be at a no loss. This is a risk-free trade. And also, if it goes up, we could continue to make profits on this trade. Okay? So that is essentially how we are trading earnings. Setting up this trade that costs less than the previous profits. In other words, we are playing with the house's money so that if we did lose, we would not be losing our own money. So that's why this trade is no loss to us, even if Amazon does not go up, which is possible because earnings is always higher risk. And that's why this is a lower chance of profit trade in comparison to the trades we share on our website. If you are interested in those trades, we'll put a link up here where you can learn how to gain access to the higher chance of profit trades. If you missed out on this video on our previous Amazon trade, make sure to watch that so you can learn more over here. Let us know in the comments below what you think will happen to Amazon for earnings. And as usual, please smash the like button, subscribe if you haven't, and have a great day.